we are going to discuss why yesterday's flash crash was the best thing to happen for this crypto bull cycle. If you have seen any of my previous videos, you know that I harp on market caps and keeping a macro focus of the entire market, preferably through the simple fear and greed indicator. If we look over the last 30 days, we were bouncing around in neutral territory, not really doing anything. People still accumulating, people still assuming some hype was about to kick in. And for just a moment, we popped into greed. And for a reminder, when should I sell? When the market is in greed. The amount you sell is determined by your investment time horizon. When should I buy? When the market is in fear, aka now. The deeper in fear the market is, the higher amount your investment ought to be. People usually reverse this, wanting to sell off cars, jewelry, and other things to get more money to buy when the market is in greed and they see the numbers going up. Why traders are so upset and why so many got screwed up yesterday. The reason for this is when you're doing day trading with margins and whatnot, you're playing with leverage. So the amount of money you earn more is exponential, but the amount you lose is exponential as well in the other direction. Most traders are looking at 1 hour candles. They're looking at 2 hour candles, maybe even four. So if you're looking at just this narrow of a time frame, 4 hours, 2 hours, 1 hours, what you saw happening was, and here's what I look at my indicators. I've shared these before. I have two. I have the exponential moving average for the 20-week, 50-week, 100-week, and 200-week. And then I have Bollinger Bands just for measuring momentum. So let's just start with just the bare minimum exponential moving average 20, 50, 100, and 200-week. If you're looking at a 2 hour chart, you're thinking, oh, we're bouncing on the top, we're about to explode up, we're about to explode up, it dropped, wait, nope, we can still pop up, and then it craters. And then you get liquidated because you're betting on it going up, and then it draws down this heavily. Same in 1 hour charts. Wow, that really zoomed out. Let me zoom in here. Same on, oh, I cannot get a good one for that. Oh, I did 1 minute, that's why. 1 hour. So 1 hour charts, same thing. You're thinking you're bouncing here, getting ready to take off. Let's lay the Bollinger Bands over this. Bands, as I've said in the past, they measure the strength of momentum. Okay, you're bouncing around, you think you're about to take off, and then it rips back down through all these support lines. But here's the problem. If you're looking at 1 hour, or 2 hour. Again, it's bouncing a little bit atop and then it gets yanked back down because it pulls. Bollinger Bands act for like momentum of the price. That's why whenever they get to the top of these bands, they whip back down. Now let's zoom out to a 4 hour. Same thing happened. But now let's look at the 1 day and the 1 week. We ran up all this time without any correction in price. We were just running up from the fear we were in September 25th. And this is why it's a great time to buy fear. Perfect example. If we come back here to September 25th, this was the lowest point of fear. The fear and greed index was at 34, 32, and we're at 35 right now. These are buying opportunities. So if we come back to the chart and look at that same time, September 25th, 26th, 27th, that's when the prices were lowest before it ran up again. Now we're back at these levels. And here's another thing. If you're doing day trading and you're looking at 2 hour candles, oh, you're looking at, oh, I have strong support. I've been bouncing above above the red line since September 25th. All these days above the red line, you're starting to get cocky, you're starting to bet more, and then the market reverses and you're like, where the heck did that come from? It's because you're zoomed in only 2 hours. This is why I say you only really need to look at the fear and greed indicator because it's going to take all of the momentum and all of the price action into account for you. Right now, it's showing the market is oversold. You should be buying. The market is in fear. You should be buying. Like all of the signs are there in simple. But if you look at, I'll add some positivity to this now. If we look at the 1 day chart and the 1 week chart, the beauty of this is this all looks normal. This is all expected activity, in my opinion anyways. If you zoom out, these are 1 day candles, and you have two levels of support. Or you have this, well, yes, that's the Bollinger Band support. But anyway, you're bouncing off this medium support line on the 1 day. And then if you zoom out to a week, which is super macro, long term, full cycle movements, it was showing 106 for that line, which it bounced off of yesterday. But honestly, we have support to 100,000 for Bitcoin support. If it falls below 100,000, I would be worried because since the beginning of this cycle, right at the halvening, we've been bouncing off of, what is that? That's the 50-week moving average for a weekly candle. That has been our floor to jump to higher highs as this cycle has progressed. We were just starting to run away a little bit there. That's not a time to start buying, even though I'll admit I was trying to. It's just what our body naturally, or our psychology naturally, wants us to do when we should be buying fear. Luckily, I hit my deposit limit on my centralized exchange anyway. I need to wait 4 more days before I can deposit more. And this is working out perfectly for me because I caught a natural correction here. And honestly, I believe it'll last a while. This, again, we're coming down from the bottom of this Bollinger Band on the daily candles. This is really good. Prediction wise, I think we're looking at 180, I want to say 180 to 210,000 for the Bitcoin peak this cycle. I do believe that's going to happen before February, but we're in the consolidation phase right now. But yeah, man, there's just too much going on globally with the destabilization of the economy globally, the banking system, all of the layoffs happening in the States, a new Fed Reserve person going to be announced, all of the alternative finance websites talking about how people are buying up gold like there's no tomorrow, like all of these, oh, they're about to print more money later in the year, like all of these narratives are leading to Bitcoin and gold as alternative safe havens for uh, um, inflation that's coming. And I think that's going to pour into the crypto cycle. That's then going to the Bitcoin cycle, which is going to pour into altcoins. And that's why you should be accumulating your favorite altcoin like hell this week, because it's a perfect time to buy.
Yourself in a state of total receptivity. Your body and your mind is responding to